Traders, welcome back to our price session trading lesson. We're looking at S&P 500 and mini futures. The time frame we're going to be using is 2000 tick chart, and the overall structure today is indicating for the most part neutral bias consolidation. But inside of this consolidation, we can see consistent series of low highs and low lows. So we have recent downtrend present. The market is about to open and prices keep trending lower. In fact, we have overshoot. We broke the bottom of the channel, the trend channel line. An overshoot is indicating unnatural activity in the market. Because this is oversold area, an overshoot can generate stronger pullback in the opposite direction, can break the trend line, or sometimes even reverse the entire trend. So we can definitely expect stronger pullback in the opposite direction due to overshoot. And the reason number two, you can see this is the lowest point during the overnight session. So this is where we're going to draw our key level overnight low of the day, important key level, where a lot of buyers may start buying at this particular price level. So we have a new low, first entry short, pullback, second entry short failure. So this right here is a failed second entry short. And why is this important to us? Well, because we're so far from the EMA, and if we combine overshoot with the low of the day key level, it's very likely that the buyers will step in, and this is what we can call unconfirmed market reversal. Because we're really going to pull back at least to the EMA. It is a trap. A lot of sellers are going to get trapped selling at the bottom of the move, and more advanced trader can consider this failed second entry short. Of course, I have to redraw a brand new uptrend working higher. I cannot sell because the uptrend is in play. Overshoot can generate stronger pullback, and market indeed is working higher. Now, what I want to do, because this is quite a deep pullback, I want to measure how deep the retracement is using the Fibonacci just to see visually the depth of the retracement, and we retrace over that 60%. And this is important. Once we retrace over the 50-60% mark, I can adapt to this brand new uptrend, and I can forget this downtrend getting a new extreme. So let's see what's going to happen. We're breaking below EMA, so this is not good for bulls. Okay, we have a new high, first entry long, pull back, and if this bar is going to get a break above its high, it's going to be a second entry long. We don't need this signal bar to break above previous bar. The signal bar itself needs to get a break above this bar for us to consider this second entry long, because it's going to be the second bar that has a break above its high, counting from this high. But we broke below EMA, so of course I cannot take it. And little nuance, if I have so many matching highs, I can reset the count. But we're below EMA, so I cannot take it. There's the second entry long. We're back above EMA, and this is important. The push back above EMA is indicating, okay, we're about to test the new high following the trend line rule, and I can't forget about this downtrend getting a new extreme, so we can get a high-low confirmation setup. Now we have high-low confirmation setup, and we can take it because we expect new high according to trend line rule, break, and uptrend played out with the break and the new high. So once I see break a new high, I have to pause looking to go long because we can correct or reverse. So you can see we have new high, first entry long, pullback, second entry long. So this right here is the second entry long, but we are not pattern traders. I cannot just have a tunnel vision and focus on this individual setup, second entry long, while the context played out with the break and the new high. So I have to skip the second entry long. In fact, if I want to go long, I need to see high-low confirmation setup. You have felt second entry long, but we're still for the most part above EMA. That's not good. Why the downtrend doesn't fit at all? So I gotta see push below EMA, distinctive one, so I can adapt to selling pressure. And prices kept working higher, and this was quite confusing because you can see why after break push to new high, we keep working higher, we keep working higher, we keep working higher, and we keep working higher. Why is the EMA holding after breaking new high? We're supposed to have correction here. That's not happening. So a lot of times when you see continuation like this, there has to be some bigger channel, another alternative. So I was looking for some spike in a channel like this. You can draw it like this or like this, but this is simply too wide. But if I'm gonna connect the swings like this and have an early break, I get a lot of confirmations here and I have overshoot. This is not the best fitting channel, but I have to explain why prices keep working higher, because you're supposed to reverse here if you're breaking your high and we keep working higher. Not easy structure, but let's see what's gonna happen. I definitely have to respect the short-term downtrend. Working lower, we have a new high for a entry long, second entry long, I cannot take it. Now we have double trap, downtrend played out with the break in extreme. It is a little congested because EMA is in the middle of these bars. is going quite sideways after potential overshoot, but it's a decent weekend market. I actually had a really good limit order here, so I scalped out, so I got quite lucky, but it was quite unclear what is the correct channel, so it's a little bit more advanced. Barely got the scalp. If you are holding something more or you have entry at the top, you're ahead losing trade. But now I have to pause looking to go long because this entry is not going higher. Overshoot is kicking in, so we can have stronger pullback in the opposite direction once again. So I gotta respect the trend like this. Break, push to new extreme. Prices keep pushing above EMA, so if I expect new high, I want to see high low above EMA. I cannot go long unless I have high low above EMA. That's not happening, so we have some small consolidation because I can see EMA is flattening. Something like this. You know, we have a second entry long, but you know, it's a bit too squeezy here. The support is not as clean. Downtrend played out with the break, push to new extreme. More aggressive trader can consider, but it's not the best setup. We're buying the bottom. We expect new high. Okay, can we break it? We cannot. I have to redraw the short-term downtrend like this. So definitely gonna go long as long as the downtrend is in play. And market keeps completely reversing all the way down here. Okay, so there were attempts to go higher. One attempt, second attempt. Bulls tried, they failed. Combined with the overshoot, market is reversing. So I simply adapt. I'm no longer expecting new high. I'm gonna follow now this short-term downtrend. Something like this. So the trend down is clean, is confirmed. So I want to see second entry short at the EMA. I want to see second entry short at the key entry point, because if there's going to be a break, I expect new low to be tested. But we have a small break, push to new extreme, and this downtrend already played out. So I'm definitely gonna pause looking to go short. Now you can see how strong this push down is. So I'm not even thinking about buying. I need to see some clean push above EMA first, but there is no good short stop. We can't even pull back the EMA. You have a new low, first entry short. You have only a first entry short. There is not even a second entry short. But I can't take it, so I gotta be careful. You know, it is tempting now to be looking for some wider channel. Can there be some spike in the channel? Because the trend down is looking strong, but we quickly pushed back above EMA and the market is reversing. So I'm gonna scratch the idea of drawing any wider channel. This will just prolong bearish pressure. I have clean decisive pushback above EMA, so I'm gonna redraw brand new tight uptrend. And as a price action trader, I just follow these short-term channels and I'm looking for a high relative setup at the key entry point. The downtrend played out. Even the wider one, I can draw a little bit wider, let's say like this. I still have a break here, push to new extreme. So no matter which channel I draw, I still have new extreme. And because I have such a nice reversal, okay, a brand new trend is established and I want to see second entry long at the EMA. Can we get a second entry long at the EMA? New high? No, we already have a break and push to a new extreme. So I have to respect break and the new high. That is the trend line rule, because once the trend plays out, I have to be careful. At this point I was thinking, okay, we may have some stronger downtrend working lower, but we quickly reversed back above the EMA, so there ended up being high downtrend like this. I have no other choice now but to follow short-term trends. We have breaking new high again. Now why the channel doesn't fit that well, because it is simply too broad. It doesn't look like a consistent series of high highs and high lows. It's basically just one steep leg, break, second steep leg. This is not how trending market looks. Overall, we are going very sideways, neutral bias, very difficult structure to trade because there is no established trend with a solid setup. Now we're just whipsawing up and down, so if you're not sure, you have to remember you cannot be taking impulsive setups. Simply try to follow short-term trend lines. Don't be guessing, don't be pushing anything. In a situation like this, where the bias is so unclear, I just hope we're gonna have some massive spike down and a downtrend established so I can get a second entry short or some stronger push up. But we're going a little bit higher, but it's too sideways, so I just gotta be careful. I cannot take second entry long. It means nothing. A singular pattern, if I don't have a good channel to confirm it or good context, means nothing. Okay, we're going very sideways. Once again, I cannot sell because we keep working higher, we keep working higher. It's starting to flatten. We have push above EMA, so now I can see we're going a little bit sideways, so I can start predicting some small consolidation because The EMA has been flat for quite a while, and we are swinging up and down, up and down. We have a break, push to new extreme. We're correcting, working lower. We can't really get a setup here to buy the bottom. It was quite tempting to look for some setup, but there is no break here. Of course, I cannot go long above bearish bar, so there is no setup. Prices broke the key level, so I actually drew a wider downtrend like this because the trend range is dissipating. It's not holding as much. The downtrend has a lot of confirmations. You have a new low, first entry short. So I was thinking we may get a second entry short, breakout pullback out of the key level at the EMA, while the downtrend needs to get new extreme. Now we have a second entry short, but the first signal bar was bullish bar. The second bar like this, double bar entry, yes, but the stop loss has to go one tick above the initial bar. So the entry is like this. The risk is simply too big. It formed with the bad signal bar. Can I get a lower high confirmation setup? No lower high. I can mark it more aggressive, but simply your stop loss, remember, has to go when you're using double bar entry. You're using double bar entry when the context is good for second entry short breakout pullback, but the first signal bar is trash. But the secondary bar is exactly the bar you want, and it's closing very close to the low of the previous bar. So you can pretty much enter at the same level using the secondary bar, but the stop loss still has to go above the initial bar. It cannot go here, otherwise you can get stopped on a pullback and market still can go lower. But it was simply too big of a risk. Break, push to a new extreme, and now the stock market is about to close. So this is the overall structure for today. It was very, very difficult structure to navigate. Super whipsawy, up and down, especially the second half of the day. The first part was quite predictable. You have a downtrend with overshoot. Once you retrace over 60%, you're thinking bullish. Couple setups early, overshoot. We're failing to reach the new high. Then we have a nice downtrend, so we're expecting second entry short at the EMA. None of them formed. Same thing for the uptrend. You expect second entry long at the EMA. We didn't get it. But after this, we pretty much just had very unclear bias. Why do we continue to go higher since there is no wider pattern? For this reason, I don't like thinking about buying, simply because I don't have no good channel to confirm this analysis. And we are struggling to break below EMA and have some nice downtrend established for me to start thinking about selling. So this is just waiting area, no trade zone. And the only second entry short where we have a breakout pullback at the key entry point, unfortunately had a bad signal bar. Very choppy day, but we have tomorrow important elections, so this is to be expected. Everybody is sitting on the sidelines, so the market was very neutral, very undecided. It's very likely tomorrow is going to be the same, something like this, very neutral, undecided. So make sure you follow the short-term trends and wait for everything to align. You cannot be impulsive when the structure is unclear. Remember, it is always better to not take a trade for the entire day than to have losing trades because you're taking impulsive setups and you're forcing a trade. You want everything to align and you want to be confident in your read. Now that doesn't mean you're going to read it correctly. You can misread it and you can have your channel drawn incorrectly, but at least you are not taking impulsive setups and you're following the rules and you think you understand where the market is heading. So always make sure everything aligns and you understand where the market may go. So I'm going to wrap it up. I hope you have a good trading day and I'm going to talk to you next time. Good luck with your trading.